Welcome back to Morning Trade Live. It's time for Inside Out. Let's welcome in Sarah Henry, Portfolio Manager, Logan Capital Management. It's great to see you, Sarah. I wanted to discuss with you what we're seeing with Nike breaking out today after its quarterly numbers to a new high.
Yes, so amazing quarter for Nike. I think to me what was so remarkable about the quarter is that it had both broad-based geographic growth and huge margin improvement. This is evidence over time about what Nike has built over the years, and it's now head and shoulders, we believe, above its peers and entering a new era for growth.
You talked a lot about its investment in its brands and that being part of the success as I was reading through your notes. I tend to agree with you. Can you expand on that a little bit?
Sure. I mean, I think when you look at what they did this quarter, Jordan's, for example, growing in the double digits. I mean, this is an enduring brand. And it's meaningful across geography. So this is the power of their business model in that they can take these exceptional brands and grow them across each geography. All of the different businesses saw growth in every area of the world. And they use these events like World Cup, for example, to launch these types of sales. And it's been very effective for them.
And the direct-to-consumer, I mean, they've really been pushing that, right?
Exactly right. So the impact of the direct-to-consumer has a huge impact on their margins, and that really was what drove the earnings growth in the quarter and will be a meaningful part of earnings growth going forward.
So when you say direct-to-consumer, I mean, explain to people what that means. I mean, it means not going through Foot Locker, right?
Exactly. So when you think of the wholesale business, that was the old way of growing through department stores and mom and pop stores. And what they did was they really rationalized that base and focused on making meaningful assortments for their core consumer that will grow through their app. So they talked a lot on the call about the Nike app and the sneakers app and how it's grown in the double digits, and it's now accounting for about 20% of the digital business. And it's in 22 countries, and they're actually rolling it out in China early. So people shop via mobile these days, and Nike has been onto that well ahead of its peers.
Yeah, I mean, that you make a great point. You said that you said it's head and shoulders above its peers. We were talking about its brand, but it's also moving forward and not getting lost in the past. Moving forward with digital, with the brands. I think that's part of the way. You mentioned the word resiliency, and that's what it takes, right?
Exactly right. And so when you think about what they have invested in, when you think about this fly knit fabric that allows them to both call out performance that they're seeing in their athletes, but also to build a shoe out of one piece of fabric and manufacture that shoe in a way that's more efficient, you can see it coming through in various ways, the creativity, but also the exceptional quality of this company.
What do you think about footwear in general? I mean, it's sort of fruit of the month to a certain extent. I know for a while Adidas started to take some of Nike's shares as the Yeezys became very popular. Now it seems that Nike shoes are more popular. You mentioned Jordans. I know the Air Max, the Vapor Max. I mean, that's what it takes. It takes some great faces, maybe from the NBA or wherever, coupled with some great products.
Exactly right. And so what we're seeing, the proof is in the numbers, right? So if you look at Google and ComScore and what people are searching on the internet, it's all Nike. When you talk about who's called out on the Foot Locker call, which is a very important and targeted retailer for them in the U.S., they talk about the strength in Nike. So we did have an idea coming into the quarter that Nike is dominating now on their Air Max, Vapor Max, and Air Force One products, which are in a very strong product cycle and are meaningful to consumers.
It's amazing how, we're looking at a chart. I see Skechers and Adidas did a little better, but overall, and Under Armour would be another competitor, though it's underperformed Nike. it just seems like right now Nike really just has the ball.
They do, and I think in talking about the different events that are available to them on the call, they talked about Tokyo Olympics, which is coming up in Q4. So it always seems like we're only a quarter away from these meaningful events for them, which are a huge opportunity to present their different styles and to reach consumers all over the world, especially in these countries where you have these middle class, growing middle class that have an appetite for these kind of products that make statements about who they are and about who they hope to be, these aspirational athletes. I mean, it's just a very winning combination.
Yeah, you make such a great point because it's such a global story, and using the app, I mean, in Manhattan, also, in addition to online and using the app, they have beautiful, gigantic stores that they've put up that are, you know, the Nike store, there was one on East 57th Street. They've just expanded this. I mean, they're taking up so much real estate in one of the biggest cities, right, in the world, and they're doing it, and they're finding that to be successful.
Exactly. And I think that another theme that you can call out in retail is the idea of experiences over things. So people are not really willing to spend on just one-off products without a whole experience that evolves around it. So when you hear about Nike and what they're building, it's an entire community of runners. It's these stores that are actual events where you walk in and you feel like you're going to something akin to, a Disney World of sneakers. And so it really, they're selling not only shoes, obviously, but an experience.
Yeah, you know what, Sarah, you're so right, because I walk into that store and there are life-size images of these great NBA players. You go to the running floor. When you go up to the sneakers up top, they have a basketball hoop, and you can do, jump, see how high you jump, and all of that leads to selling more sneakers. So reinventing themselves over and over again, and that's why you're saying they're ahead of their peers. Sarah Henry, excellent conversation. Portfolio Manager, Logan Capital Management. Thank you.
Thank you.
Now let's bring in Tom White. Tom, I think Sarah made some fantastic points about why Nike remains, right? It's cool, It makes a statement. The stock itself breaking out today because the market is not terrible today, and it gave Nike the chance to break out to new highs.
Yeah, I think they're doing everything right. And to Sarah's point, there wasn't much that she said that was negative. I didn't hear one negative comment on there. So how do you take advantage of that as a trader or as an investor? That's the way I look at it. You can buy the stock outright, hope it goes up. You collect a decent dividend on this name, and it does have that brand awareness. We didn't even mention the advent of golf picking up with Tiger Woods this year. That actually contributed a lot to Nike's bottom line. But the ability for kids to wear and want Michael Jordan shoes. I mean, I was at the United Center and the Chicago Stadium. I saw Jordan play all the time, and for that brand to resonate continually with the younger generation is pretty substantial. And their growth overseas, 27% growth in China, 42% growth in digital sales. I mean, that's just going to keep expanding into those Olympics because they need those events like the Women's World Cup, which help project sales too. So,
and she was talking about Tokyo coming up. Yep. That was a good one. It's pretty amazing because that's how you tie in and that's how you sell more.
Yes, exactly. You need those events and you need those representatives, whether it's the NBA players, soccer players, and such.
And we just finished U.S. Open tennis.
Yes.
One of my favorites.
Exactly.
Yeah.
Being a New Yorker, of course it's your favorite. But what I looked at in the option market, even with Nike hitting all-time highs, after the open today. It's pulled back just a little bit, but the first trade that I looked at using options was something to the upside, but not severely to the upside. So what I looked at, Nicole, was buying a calendar because volatility comes out of these names after earnings. And buying calendars for a directional bias trade in a lower volatility environment makes more sense because you pay less for that calendar. And what I looked at was buying the November 95 strike call and then selling the near-term October 4th weekly, which expires in about 9 days. I'm paying roughly $1.30 debit. And with a long calendar spread like this, the cheaper price point that I get in, because this is a long Vega trade, with an optimal price target of 95. So you can move that strike anywhere you want, where you think Nike is going to go over the next in this case, 51 days until November expiration. But you see the apex there near the 95 strike. You're paying 130. You have the ability to more than double that. And if volatility does start to increase, that actually expands the price of that calendar also. So this is one way to take advantage of maybe about a month and a half, 2-month trade with Nike, with the expectations that it's going to keep grinding at $95. And we saw a bunch of price target hikes in this name out of almost every Wall Street firm.
Yeah, and you talk about the volatility, right? You first get this volatility right after the earnings, and we see this big spike. But now this is a great way to do this.
Yeah, right after earnings, we'll see that volatility crush is what we call, where the news is out.
Right.
So you don't have that additional worry that where the stock's going to go. And this type of strategy just takes advantage of a grind higher. And its risk-defined nature, so you know what your downside is between outside of those break-evens, about 91.5 on the downside and about 98.5. So you don't have to be exactly right on a trade like that, but you have to be within that range, within a few percent of that 95 strike for that to become profitable.
I also, as I was looking at the stock, and you mentioned, you could just buy the stock straight out. I mean, right now it's at 91.96, so
right.
it's up about 5.5% at this time. And just to get a sense, it's up about almost 25% this year.
Mm-hmm.
But you have one more way
Yeah.
to do this. What's the alternate option?
Well, it's the same type of trade based on what Sarah's analysis was of Nike shares, that they're going to probably continue to go higher. We've seen those price target hikes. Now we're seeing them anywhere from $95 up to $150 price targets from a lot of these analysts moving forward. And I wanted to take a more directional bias on this. Something with the outlook that over the next 51 days, maybe a couple months, that this stock's going to continue higher as their momentum builds. And I'm buying a vertical as opposed to selling, because I mentioned that volatility crush. That makes buying verticals or directional trades cheaper to buy. And if you take Sarah's analysis into context, what I did was I went out to that same November series in the monthly options. They're the most liquid typically, and you're buying the 92.5 strike, which is basically at the money right now because you mentioned the stock price about $92. You buy those calls and then you sell to reduce the cost of this directional trade. You can buy the calls outright, but to reduce that cost, I sold the 100 strike, and you're roughly paying about $2.70 debit for that. With a $7.50 wide call vertical to the upside, paying $2.70, your break-even's about $95.20 to the upside, so about $3 higher than where it is right now. But you do have 51 days in this trade, with the idea that it's cheaper to buy that vertical when volatility goes down, which happened after the earnings. But then you've got a nice little segue to the upside over that next month and a half, 51 days, like I mentioned. So this is another way
Nice
to take
max profit there,
Yeah,
too.
exactly. You're going to make roughly about $4.80 on this if it goes to 100 by expiration. But a lot of times when I buy a vertical like that and I pay $2.70 Nicole, and maybe it goes up to $5, if you see a boost in Nike,
Right.
then you maybe close half of your position. Maybe you start managing that out a little bit because you've already nearly doubled what you paid to get into that spread. So you don't need it to go to 100, but you just want it to start slowly moving higher over the
Moving
next
that way.
month and a half.